I'm Catherine Ross, and I'm here live from the NYSE with Jim Cramer. Jim, we've got a lot to cover this morning, but I want to start with Uber because that's real money stock of the day.
Sure. I mean, the reports, the analyst reports are very positive. Now, of course, anytime you have a stock that's down below what was an agreed upon good price for the offering, that's fodder for upgrades, fodder for buys, and I think that the buys had a lot of gravitas, which is that Uber could be more than a cab company. It could be very easily a really kind of just an ecosystem. I had McDonald's this weekend. Who delivers McDonald's? Uber, okay? If you look at Uber Freight, it's going to be able to solve a lot of the freight problems in the country, according to Lior Ron, who's the fantastic CEO. I agree with him. He's talking about a dramatic lowering of the price of freight, which you know would be so helpful to consumer packaged goods because you won't have any trucks going home empty. And they've got all new set of drivers, a lot of immigrants, a lot of Sikhs. I'm not picking just saying any religious. That's what they said. Sikhs and Hispanics have been historically discriminated against by the trucking companies, but they're going to drive Uber trucks. So I'm very excited about the whole platform, and obviously the analysts are too.
So I just want to make sure that everyone knows today is the end of the quiet period for Uber, which means that we're going to see a lot of analyst notes. We've already seen almost 20 of them already.
Yeah, and look, do I like Uber? I mean, geez, after this sell-off, there's so many other stocks. And you see them. I mean, like you have a UNH that's still down. Can you buy Facebook? I've said the next day is you can buy. We'll be able to buy FAANG on the next day. So far wrong about Apple. And I'm not Netflix. Apparently, the money's gravitating to Netflix because the president doesn't seem to hate Netflix. Remember, the president called for a boycott of ATT. I think we have to be careful. The president is saying that the tariffs are making him wildly popular. So just be aware of that.
Just circling back to Uber really quickly, how do investors wade through all the noise of all of these analyst notes?
Well, I mean, I think that Uber is below the offering price, and that means that a lot of analysts want to buy it. You're buying it if you think that it can be more than a cab company. I think it can be. I think it has remarkable leadership. My problem is that after the last few days, there have been so many stocks that have come down. And the idea that inflation has come down to the point that the Fed might be worried is a clarion call to buy a whole different set of stocks than Uber.
Now, as I've already mentioned, guys, Uber is real money stock of the day. So for more coverage on that, go to realmoney.com. And Kevin Curran, who is our Real Money reporter, did a video. Yeah, he's terrific. He did a video breaking down the 3 things that he's watching over on TheStreet.com. All right, Jim, let's switch gears.
By the way, just, when I say that there are other stocks that are down, that are interesting. I mean, I'm talking about a stock like Nike. It's just been hammered. UNH has been hammered. You get a stock like MasterCard, which we own fractions, just crushed. So be aware. I know Bruce Kamish does very good stuff. He's against all these stocks. But just be aware that we're really down a lot. And I came out yesterday with a piece from Real Money talking about being oversold and the reaction after being -5. And it looks like we're getting some of that positive. And that's what I wanted to talk about. I want you to go back to my Real Money column. You'll see exactly what I said. I know you have to subscribe to Real Money because it's gated, but I think it's worth it. I've been writing there for about 20 years.
Jim, I want to talk to you about Salesforce's earnings. They report after the bell today. You've constantly said, wait when it comes to buying till after the earnings.
The number gets reported. It'll be a great number. And then the stock gets hammered, and then you buy. Maybe this time is different because Salesforce was down 7 points ahead, but I'm not going to go against what the percentages are. Now, look, it might report a great quarter and go up. I'm just saying the percentages say it would go down. And a lot of time, and I really want to make it clear to people who watch this video, I go by the percentages, okay? I don't go by what I think Salesforce could own. I talk about what it's done. Salesforce may report a great quarter, but at the same time, it's had many great quarters and it's gone down. So all I know is the percentages. It may defy the percentages. When you play blackjack, okay, you don't hit. When the dealer is 16, you don't hit on an 18 or 17 because it's far less likely that you get a 4 or a 3 or 2. And the dealers probably go bust. But, a lot of people have to understand the market's like blackjack. And you've got to go with the percentages. And I'm saying that the dealer has a 6 showing, okay? Now, maybe the dealer turns out to have a 4 underneath, and you're going to lose. But the 4 is highly unlikely when you look at the percentages and the probabilities. I am saying that the probability of Salesforce reporting a great quarter and going down has been what's happened. I don't have anything else. I don't know the number. I am friendly with Mark Benny. We don't talk about this stuff. We talk about charity. He's got me giving to a lot of different charities, and I feel great about that.
And for those of you who don't know what metrics you need to be paying attention to, Jeff Marks on this show last Friday gave the metrics.
Another great video. Another great. We're really, I hate to be as promotional as I'm being, but really throwing a lot of people.
We are. Okay, so now we will be talking more about Salesforce over on Action Alerts Plus daily rundown shows. So to tune in, sign up.
One last thing, 3M kind of reported, gave you an inkling that the company's not going to miss. And you see that's up a couple bucks. That versus Uber, okay?
So to sign up, go to ActionAlertsPlus.com. All right, Jim, we can't let you go without talking to you about the Fed. And last night, Fed President James Bullard came out kind of dovish.
I like Bullard very much. And this morning, we got some reports from Steve Leeson about Powell talking about the problem of lower inflation, talking about the Fed funds rate going down. Obviously, the Fed funds rate should never have had that last boost. I've been saying that the Fed really got it wrong. Let's see what they do.
But what happens? This is the moment why is this the moment that the Fed is choosing to cut rates?
Well, no, they're not going to cut rates. They're just saying that inflation's come down. If we have an unemployment number that's really weak, I think it's going to put a lot of pressure on the Fed to cut rates.
And for anyone watching, the Fed is such a big deal for the markets. And I'm wondering, for investors who aren't so clear on why the Fed is so important, should they be reacting to a speech from Powell?
They need to react to any particular change. If you take a look at the December oversold, minus 12, when the Fed switched directions, it obviously was a very big deal, which is why I've been saying you can't wait for the Fed to switch directions. If the market goes below minus 5 on the S&P oscillator that I follow, that's a good sign. And you got this nice rally today. Of course, you can blow out if you want to. No problem there.
Now, Jim, before I let you go, Real Money, you wrote a column on Real Money this morning about the antitrust issues that
I laid out the issues, and I laid out what happened to me more than about 20 years ago when AOL declared something that was very monopolistic. I didn't complain. I recognized that you could go elsewhere. The companies that are upset about, there's a Spotify lawsuit in Europe that says that the Apple takes too much, Apple apps. And I think that you're going to see that's the gravitas that is a great gravitas against the Apple management and what Apple's doing. I don't think it should, but that's what happens. Facebook obviously is a colossal screw up. We know that. Alphabet, if they break it up, stock would go higher. So I'm not as concerned. I don't think you should take action and dump any of these stocks. We're writing extensively on them.
So you don't think it's the nail in the coffin with the House Judiciary?
I don't want to front run what we say on Action Alerts. That's not right.
All right, Jim, thanks for joining us. And that's all the time that we have for today. For all of you watching on TheStreet.com or on Facebook, we are now jumping over to our Action Alerts Plus members-only club video on ActionAlertsPlus.com. Thanks for joining us. I'm Catherine Ross, and we'll see you tomorrow.